Hey, welcome. Today we're jumping into the pretty intense world of commercial litigation finance. It's a financial tool that is totally changing the game for how big corporate legal fights are fought and won.
So, picture this. Your company has a total slam dunk case, maybe a patent that's been stolen, or a major contract breach that's worth a fortune. But the other side is a corporate giant with basically bottomless pockets, and they're ready to drag this thing out for years. What do you even do?
Well, the sad truth is that a lot of really strong, legitimate corporate lawsuits just get dropped. They never even get started. The cost of top lawyers, expert witnesses, you name it, it's just so overwhelming that for many companies, justice is simply priced out of reach.
But what if you could level that playing field? Well, that's where this really powerful financial solution comes in. It's called litigation finance, and it's all about getting the money you need to see a fight through to the very end.
So, what is this stuff? Basically, it's an arrangement where an outside investor, a third party, comes in and pays for some or all of your legal bills. In exchange, they get a slice of the pie if you win. And here is the absolute key. It is almost always non-recourse. That's the magic trick. If you lose the case, you don't owe that funder a single penny. The risk is all on them.
Now, you might have heard of something like this for, personal injury claims, like a car accident. That's what we call consumer legal funding. But what we're talking about today is its much, much bigger and way more complicated sibling, commercial litigation finance.
And trust me, the differences are huge. We're not talking about a few $1,000s. If you look at that right-hand column, commercial finance is a whole different beast. We're talking millions of dollars poured into these huge, complex cases like patent fights or antitrust lawsuits that can go on for years and years. And because so much money is on the line, the funders often have some say in the strategy to protect their investment.
Okay, so how does a business actually get their hands on this kind of funding? Well, the process is, as you can imagine, incredibly thorough. The stakes are just too high. Let's break down how it works.
So it all kicks off with this super intense evaluation. The funders bring in their own team of legal sharks to basically try and poke holes in every single part of your case. This is not a quick process. We're talking weeks, maybe even months. If they like what they see, a very detailed non-recourse contract gets signed. Then the money starts flowing to pay for all the heavy lifting, the lawyers, the experts, all of it. And finally, if you win, the funder gets their agreed-upon cut from the settlement. If you lose, they walk away with absolutely nothing. This all sounds pretty good, right? But it leads us to the one question every business leader is gonna ask. What's the catch? What does this actually cost? Because let me tell you, it is not cheap.
The really high price tag boils down to two things: massive, massive risk and very long timelines. I mean, these funders are putting up millions of their own dollars, sometimes for years, with absolutely zero guarantee they'll ever see that money again. A risk that big demands the potential for a really high reward.
Abstract numbers can be kind of hard to wrap your head around, so let's walk through a pretty typical scenario to see how this plays out in the real world.
All right, so let's say there's a tech company with a really strong patent case. A litigation funder comes in and says, we'll cover your legal costs, and they commit $3 million. Right away, all that financial pressure is just gone from the company's shoulders.
And remember, these things are marathons, not sprints. The legal battle is a total grind, and it drags on for 4 full years. And that includes going through the whole appeals process. That's 4 years that the funder's $3 million is tied up and totally at risk.
So that brings us to the repayment. The deal they signed had what's called a tiered return. It's pretty common. Basically, the longer the case takes, the higher the funder's potential payout. And because this one went on for 4 years, the highest tier kicked in. A repayment of 4 times the amount they put in, but only if the company wins.
And they do. The company wins a settlement for $25 million. Out of that pot, the funder gets their $12 million back. That's 4 times their initial $3 million investment. The company gets to keep the remaining $13 million, all from a case they never could have afforded to fight on their own.
So what's happening in the market right now? Well, it's pretty interesting. This data from a West Fleet Advisors report shows that the amount of money going into new deals in the U.S. has actually been shrinking. It's down quite a bit from its peak in 2022. What does that mean for a company looking for funding? It means that with less money to go around, funders are getting way more selective. They're only cherry-picking the absolute best cases, which makes that initial evaluation process even tougher.
So when you put it all together, deciding to use commercial litigation finance is a huge strategic call for any company. It comes with some really powerful perks, but also some pretty serious trade-offs.
I mean, the upside is fantastic. It's like a secret weapon. It lets you go toe-to-toe with literally any opponent, no matter how big. It moves all the financial risk over to the funder, and it lets you keep your own cash to, run your business. Plus, it gives you incredible leverage when you're talking about a settlement, because the other side knows they can't just bleed you dry.
But there are absolutely downsides. The biggest, most obvious one is that it seriously cuts into what you take home. You're giving away a big piece of the win. On top of that, courts are starting to demand that these funding deals be disclosed. The contracts themselves can be insanely complex, and you might have to give the funder a seat at the table for huge decisions, like whether or not to accept a settlement offer.
And this whole industry isn't just operating in a bubble. Regulators are starting to pay a lot more attention. You've got some states creating new rules about disclosure, and at the federal level, there are real concerns about foreign money funding U.S. lawsuits, which is pushing for a lot more transparency.
So that leaves us with this really big question to think about. Is this thing a great equalizer that gives people access to justice, or is it just turning our legal system into another stock market, where lawsuits are just assets to be bought and sold by investors? The real answer is probably somewhere in the middle.
Thanks for watching our overview of commercial litigation finance. If you found this helpful, hit the like and subscribe to the Express Legal Funding channel. Your support helps us reach more people on YouTube. To learn more, visit expresslegalfunding.com. See you in our next video.